Was that a satisfactory response? Any other intervention from members with regards to the fuel policy? Okay. Now, let's look at the fixed assets register. The first question is just a simple one. What challenges are you having? In general terms.
Thank you very much. I think I'll ask the video is the one to 24 over.
Challenges in terms of implementing your fixed assets on this one.
Yes, I think currently we don't have challenges with regards to our fixed asset register. What happened at the time is that some of these assets were procured because we had moved into our new building. We needed furniture and then we needed equipment. So at the time, some of them were not fixed at the time. Some of them were packed in the store. They were not fixed at the time. And also, maybe if I would say there is challenges maybe with regards to the location of the assets, because we have different offices. So the officer responsible for updating the fixed asset register did not probably put in the right location of the fixed assets. That had made it difficult for the auditors to be able to verify the assets that were said to be in the register. So yeah, I think basically this is my response to your question.
Now you would be specific, and I will refer you to the consolidated management letter, page 11. Page 11.
Yes.
And I will read the observations, 3.18. It says, it reads, the following points were noted during our review on property, plant, and equipment. A, differences between quantity delivered and quantity recognized in the assets register. Now let's look at the basic concept of the assets register. Apart from recording the historical cost of the asset, it must show the actual reference of the asset, it must show its location. And then it can as well go to show its annual depreciation accumulated and then due to removal values. But the fundamental thing about the fixed asset register is to provide security for the value. Now, if we look at the items from the stacking chairs to the laptop, and we try to attach some monetary value between the items that were delivered and the items that were recorded in the fixed assets register, you realize that the gap created stands at almost 6.4 million. This $6.4 million this could be assets which are inside the National Police Office, but they are not recorded in the register, which means at that particular moment in time, if you were asked to make a comprehensive report as to the non-current assets of the National Police Office, you are going to undervalue it. That's one. And two, if at all any of those assets goes missing, it will become unnoticed because you don't have them exactly in your register. So before allowing you to respond, I will pose this question to the external auditors. When you realize that there was a difference between the value received and the value recorded in the fixed assets register, did you do any physical verifications?
Thank you, Honorable. Yes, a verification was conducted. As you said, the register forms the basis of the verification. Now, if the event is incomplete, then when you are verifying and the assets are missing, it goes unnoticed. So that's why we recommended management to update the asset register.
Okay. But sorry, still on the issue now here is not about the obeying. The issue here now is we know from the delivery notes, for example, the starting checks. From the delivery notes, we know that 72 was required, 72 was delivered, but in the fixed assets register, 57 was required. So now the question is, did you go to the ground to verify that the 72 that was delivered was physically present?
Yes, I mean, it can be difficult at this time, considering so many were in boxes in the store. And then, I mean, you can see they can put a chair in a box, but you won't know if this is the actual chair that was delivered. Like, in the event it was in the register, it'll have the unique code where you can trace it from the physical register to the physical stock or assets.
External auditor. Myself, myself, I worked 10 years consecutively as an internal auditor. And I was fortunate to work in an organization that was selling furniture station. And I know that all these furniture items, there are references on them. These references are explicit disclosures in the invoices. And they are explicitly disclosed in the delivery notes as well. So I believe saying that they'll be in boxes and they'll be in storage, it will be difficult to do verifications. I don't believe that will be an admissible excuse. So now the question would be, what can we do now? Because this is a significant gap. For example, let's look at the issue of the laptop computers. 100 was procured, 100 was delivered, but 0 was in the business register. Our concern here is for you just to tell us we verified and they are there. And you would know the only thing happening is a clerical error. Did you go ahead to do the verification for the laptops as well?
Definitely, of course, I mean, a verification is done. As you're fully aware, I mean, as auditors, you choose a sample of assets you want to verify and verify. But as I said earlier, the starting point is the asset register. Once it's incomplete, it affects the whole verification process. Now, in terms of delivered goods, if they are there or not, when you're auditing the summary documents, you see there's adequate duty segregation. I mean, who received it, who signed it off. But now, if the register is incomplete, then it affects the whole process going down. That's our concern. Now, as what you're saying is, considering we reported it this year, I mean, the next audit going on, as they have said, the register has been updated. Now, further checks will be done on this. So, I mean, that's how the process will work. Yeah, but I mean, as an audit, I mean, to go and do an external audit and count all the 100 laptops, 100 chairs, 200 chairs, I mean, it doesn't work. I mean, it's based on.
External auditor. There was the risk involved. The risk is significant. Not so. The risk is significant. If you tabulate this, you look at the gap, it's almost 6.4 million. And I believe that should have the materiality of that value should have started another level. To say, I will report this, it will be part of the financial statements, and the users of those financial statements would like to know whether at the end of the day, these items are physically present. Because right now, it has created doubt in the minds of people. Are they delivered? They are in storage and not recorded in the books, or are they not delivered at all? So the only individual, the only exercise that could have proven otherwise was the auditing function. So the question comes back, what do we do at this material time to ascertain this?
That's fine. I mean, in terms of risk, you think it's quite a high risk. As our view, it was a high risk. That's why they reported as a grade 1 risk for management to work on immediately. Now, what we're doing is the next audit, I mean, in a few months' time, you have to go on ground now to physically verify this 100 is in the register. And then considering it's a high risk area, you have to increase your sample verification. So, I mean, that's how the process will be to clear this issue.
Thank you. Now to the Auditor General.
Yes. Sorry. Here, I just want to clarify 2 issues here. One, because the computers are IT equipment, so they were kept in a separate register by the IT department. So that was one of the reasons why they were not in the register. That was done by our factotum. So the other fact that I want to mention here is that the understanding that the officer that was handling the register had was different, because the ones that were not assembled, he did not record them in the register. Only the ones that are assembled, he will put tags on them and then enter them in the register. So that was one of the challenges, because they were all there, but because they were not assembled, we cannot assemble them unless we invite the supplier to assemble. And at that time, they were not needed. So they were all packed in cartons. So that's why he did not enter them in the register. Maybe his understanding was that because they are not yet, assembled, utilized, so they are not supposed to be in the register. But they were all there, and after the audit exercise, we had updated the asset register. Currently, we have the updated asset register. And all these assets that have been mentioned here are all available for verification.
Yeah. Just to complement Honorable Chair, if I may.
Yeah, come to that.
This is why we are just emphasizing on updating the register. The assets are there, but if they are not assembled, you cannot tag them. And also the laptops were fairly new; they were not, distributed. So kept by IT, and the register was kept by IT. So this is why. Now we have updated based on, assembling the furniture and also distributing the laptops. That was the reason, because you cannot label them, when they are not assembled. But of course, what we feel there, because the location should have been stores, or maybe that's where that recently. But otherwise, you cannot label them and put their tag numbers in the register, because they are not tagged at that time.
Mr. Auditor General, I will come to you now. At this stage, what do you think can be done immediately to remedy the situation? Because we know that assembling of fixed assets, or they are non-assembly, should not serve or stand as a deterrent factor from recognizing them as assets of the organization. In fact, the records are based on the what? Documentation. Once you buy them, before they are even delivered, you recognize them in your books. But what can we do immediately to remedy that situation?
Thank you, Honorable Chair. We have done that now. We have updated the register and it's there. And we have said that in our response on page 12, that the asset register is updated and consolidated to include laptops and everything. It's complete and available for review.
Sorry to interject. Can we have results of that reconciliation?
Yeah.
Can the assembly have that?
They can, yeah. We can supply that today once we go there.
Thank you. And with the respective delivery notes for those various items as well.
Oh, they will have to come with documents then in that case.
Okay, but now let's have the fixed assets.
So
indicate.
Yes,
items.
absolutely. Okay.
Honorable members, any supplementary questions on that? So when can they have that?
Today. Let me go. Is that right? Tomorrow.
Yeah.
Tomorrow is fine. Okay, tomorrow.
Now we'll give you time. Let's have it latest by next week Tuesday.
Okay.
Tomorrow is Friday. Monday is also a busy day, but we have it latest by next week Tuesday. Is that okay? Then to the accountant, let's look at the balances. The opening and closing balances. There were discrepancies which were noted by the external auditors. And in the management response, we did indicate that many of those discrepancies were as a result of some skill checks which were reversed in the books of accounts. So now the question is, does this have any implications on the financial position that was reported during the prior year?
Thank you very much, Chair. Yes, thank you for that question.
But I said the accountant. Let me start with him.
Yeah.
I want to start with that.
Let's start with the
Okay.
Let me start with that.
Thank you. So the state checks that were reversed and recognized in subsequent years will have implication in the financial, position of the years they relate to. Obviously, that's why we, after reversing them, recognize them in subsequent years. That is because these transactions were recorded on a system, that is administered at the Accountant General's Department. And after the end of every financial year, after preparation and submission of the financial statements, that period gets closed. So if a state check gets reversed, that relates to a previous period. If you are able to do the reversing on the system, it would automatically update the balances of that period. But if you are unable to do that on the system, you can only adjust it in the subsequent year. That's why our practice has been, updating it on the opening balance of the subsequent year instead of going back to the actual year when the transaction occurred.
Thank you very much, Chair. You have said it. Just what we do is normally when it comes to statement, because they adjust you restate the opening balances with the comparative figures. That's where because you don't normally go back to the full statement and do adjustment when it comes to account. Unless maybe there is a disclaimer of, on previous statements. Maybe as you may, I don't know, I'm using an example. It happens in America, I think Donald Trump. It has not been done yet, but if these previous auditors, former auditors, disclaim the opinion that they is previous. So that the implication is maybe if they are to maybe assess this tax liability, maybe another audit has to be done, and another opinion has to be given. But the practice is, normal practice is, you restate the opening balance, which is the comparative figures. And I think that is highlighted in the report.
Now, this one will go to the example. The restatement of those balances. Should they have the disclosures in the financial statements, or they can continue with the status quo that they are having, that is reverse them in the books and come on the face of the financial statement without disclosing it, and then just changing the opening balances, which will vary with the closing balances of the bank. The way we can ask material disclosures on the face of the financial statements.
Yes, the additional disclosure effect. If you refer to page 17 for 2017, there's a disclosure on point 10.
Page 17 of
2017.
Okay, then that is enough. Thank you. We will not spend much time on that. But the last one will be with regards to the missing vouchers. Auditor General, the missing vouchers.
Okay.
I know still now you will take the issue to the Accountant General's Department. Not so, because that was the justification given. But I believe the responsibility of keeping accurate documentation lies in the hands of the Office of the National Auditors, because you are the one who is incurring the expenses, even though the payment is done at another point. So, can I proceed?
Yes, please.
Now the question is, what mechanism do you think we have to adopt to make sure that even if at all payment is done on your behalf, accurate documentation are maintained on a timely manner in your office?
Yes.
Look at the consolidated.
Yes, I have seen it.
Yes.
I have seen it. I'm not sure. This actually, these vouchers should give it out. It should be in our office. These are not processed by accountant general. Except for the, I'm not sure about one by itself, but this one should really be known. These are payment to our partners, associations, ACCA, and of course ACCA, and then of course the maintenance of the and of course the maintenance of building.
Now, in that case, let me refer you to 19, and I will read the management response. The management response. It says, one of the vouchers in 2017, voucher number quoted, the value was 200,000, was cancelled. This was a part payment towards the maintenance cost of the Ministry of Trade's building. The payment was replaced by another payment amounting to 430,000. In 2018, 6 out of the 8 vouchers that could not be retrieved are 1/6 advance payments, which are centrally processed at the AD's department from the specialized deposit accounts. The funds are remitted to the NAO for onward payments to staff. The other 3 are subscription payments to Officer and Officer E and ACCA for 2017, 18, and 19, and they were all processed at the AD department. Direct transfers made to NAO account, AGD special deposit account, as what? The payments. So which means here, what you were saying is you do not have the documentation because the accountant general department was doing the payment on your behalf. But that contradicts to what you are telling us. You are saying this was done in-house and you should have the documentation. So what is your status?
Yeah, there should be instructions because these are payments in foreign currency. What do you do? Usually write notes to the letters to the accountant general to make the payment on our behalf and debit, of course, debit our account. That has been the process all along. So the documents should be in our office. Maybe they have been searched properly. They should be in Officer Ifra, which is actually in my secretary. We have a document. It should be there. Trade is we share building with the Ministry of Trade. I know.
No, let's talk about the documentation.
Okay.
Now, do we resolve that management response will change, and now the external auditors can make a follow-up on that particular issue and do verifications on the files that you have just referenced?
Yeah, the management response did not reflect actually what transpired. So maybe that will change. Because like I said, although they are processed at accountant general, we have letters. You know that it should be a trade. Accountant general will not process it without instruction from us. There should be, so that instruction letter should be in our office, definitely. We should have copies of those instruction letters to say pay on our behalf. In the case of the Ministry of Trade, you know, we share the building with the Ministry of Trade. So there will be a bill and they will ask us to pay our part. And again, there should be a letter to that effect. And we pay to the Ministry of Trade to do the maintenance of the entire building. You know, it's a story when we were in Bantu, before we move out. So there should be letters, not the vouchers necessarily, but the letters should be there, you know, relating to this particular payment. Yeah, payments also.
How long do you think it will take you to produce those documents?
Now it will be difficult. I'm not sure why they will not even say it there, but they should be there. 2017, right? Okay. Again, give us another question. Nowadays,
Tuesday.
yeah, they will look into our part. We should be able to see the payment instructions there. Yeah.
Okay, but this does not solve our issue still now. The issue at hand is all transactions in the name of the National Bank Office, whether it was performed by the office or it was done through a third party, the office has the responsibility to maintain efficient and accurate documentation.
Absolutely.
So now, how do we ensure that?
No, I'm saying they should be, the records should be in our office. That's what I'm saying.
Which means we are not expecting a replica of this one again. No.
May I? As Tsunami said, that was their documentation. What is about missing, not documented, but there are documents, payment instructions, and also a letter that we reacted to. They wrote and we responded. In the case of Ministry of Trade, yes, it's just that maybe it cannot be traced. That's the problem of tracing the document. What is there? they wrote formally, and we respond, and we can even maybe try to maybe get the copy of the letter that they wrote. It's about also maybe moving from Banjul to it, because you have about hundreds of vouchers. That's not an excuse, but of course there are bound to be some missing ones. But not that because there's no document. They are documented. And in terms of this subscription, these are annual subscriptions that we do. I mean, sometimes if you don't remit our subscription on time, there will be reminders. But these are just standing order, if you will, because it's a normal payment that we do annually. But of course, we document all our transactions. It's just a matter of raising the relevant document.
For matter of clarity, do we say that the issue of non-documentation does not exist in the National Audit Office? That all transactions have the required supporting documents?
Yes, absolutely.
And that these particular transactions, which are referenced in the external audit report, their receipts will be provided.
Yes.
Okay, thank you. Honorable members, do we have any questions or clarifications? Okay.
I just wanted to say, these payments can be even placed in the bank statement and to the bank of, a bank account of, the other part.
Can you say that again?
What I want to say, in the case of Ministry of Trade, the payment can be traced to the account or the supplier that they supply the information, accounts information. What I'm saying is,
Deputy Auditor General 1,
yes,
you are more than an accountant. You know what documentation means. So when it comes to documentation, there is no substitute. No, sir. So I think we all agree to the fact that there are challenges, and we all agree to the fact that they should not have happened. And then we improve on them. No, so and then we speak the way forward. But there is no substitute to that. Accurate documentation has to be maintained.
We totally agree. It's not that we are being defensive, but actually there are documents.
I understand.
Because I'm privy to this transaction. They are. It's just a matter of cannot be traced or missing or mistake. They are.
Okay, we will take that as a good start, and then this will be our last intervention on low payroll, staff payroll differences. This you can find on the consolidated management letter, page 20. The auditors did indicate that the total payroll, there was a difference between the total payroll and what was reported in the financial statement. So again, I'm not going to the management response. Some references were done to the system, and references also were made to some user rights. But my question is, as the Auditor General, should this situation have happened in the first place? It's 2019. But we can have it in page 20 of the consolidated management letter.
Essentially, I think our management responsibility is so. It's about it's a system issue at the level of Canada. They are the ones who we can make requests, but it depends on their own turnaround time that the desk officers. Some of these reconciling items that have belonged outside, but are caused by that problem in the Canada environment. That must have created this. The consolidation was impossible because what we have done, as our response indicated is that we have bought some equipment for wellness. These are training equipment. We have a gym at the office. For your information, there is a gym there that we. So what we are doing to maintain the gym, we are deducting from each staff some amount of money so that we can replace the items going forward. So that it can sustain itself going forward. In that thing, we need Accountant General to prepare, create accounts for this particular purpose. That was not possible, and that must have caused these differences. That's the result of these differences. They have not come, but I think that has been resolved now. It has been resolved now. And we have got an account at Central Bank where these monies are not for that purpose. But at this time, they could not create that account for us, and so these differences.
My question is this. My question is this. The salaries of staff is not based on the net after deductions. That's it. It is based on the salary that the staff is entitled to. So the difference highlighted between what is in the payroll report and the financial statement, where is the gap coming from? Because if what we are saying, there are deductions from the staff salary, that does not in any way reduce the total salaries staff are entitled to. The only thing it reduces is the real wage that the individual will receive in his pocket. So where the discrepancy between what is paid to staff and what is important in the financial statement?
Let the finance manager help you.
Thank you. The difference of this much highlighted in the report is not what was actually collected from staff, as contributions towards the maintenance of the gym. This difference must have arose because of the complications, the introduction of the deduction brought along. The deduction started in May. So at the time, actually, in the office, there was a capacity deficit on this system. I was in the office at the time, but we didn't know actually what the requirement was at Accountant General. We just requested for them to facilitate the deduction for us. And what they did was just the part they were required to do to allow us to deduct the monies from the staff net salary. But the other bit of it, the part of it that was to enable the interface of the PE records to the EPICO. EPICO is where the expenditures are recorded. The bit of it that was to allow that didn't happen. And we were at the office unaware of that. So it was each month, if our automated exporting of the data fails, that staff from our unit would go to the Accountant General to enter the data manually. So with the assistance of some system administrators at AGD, that would be done manually. So it was as a result of these manual entries from May, when this deduction started, up to December, that resulted in this difference. We were only able to detect it in December. It was December when we couldn't even enter the data manually that they told us, that you've been having problems since May, and it's because of this setup issue that your system could not, allow, or our system could not allow the, automated exporting of the data, and our staff were resorting to manually entering the records, on EPICO. And the manual, because there is a lot of complications in entering staff PE data, manually. It's how, in my opinion, this difference arose. But it wasn't actually the deductions that were made from staff, in respect of staff workers.
Correct me if I'm wrong. Does that mean that the management response to the payroll observation is inaccurate?
No. In essence, what I am explaining, I think, yeah, it's consistent.
The management response does not reflect that there was an understatement in the value of the payroll expenses. That's all.
No.
Does it reflect that?
No, there was no understatement.
Okay, now how do we reconcile this? The total payroll is in excess of 29 million. What is reported in the financial statement is 26 million. How do we reconcile that? And the difference is actual salaries paid to staff were deducted from the payroll with regards to what subscriptions we paid.
No, staff, as you rightly said earlier, because, to us, on hiring of the staff is the gross salary that they are entitled to, not what they end up going home with. That has been accurately, entered and accounted for on our system from May to December.
Is that 26 or 29?
That was 26. That is the 26. What I'm saying,
Where is the 29 coming from? Now let's substantiate the two values. Then we can be at the same wavelength. If that is 26, then where is the 29 coming from? What does it reflect?
The 29 is what we have seen in our reports at the end of the period and believed to be inaccurate recording due to the manual entering of the transactions by our own accountants. Personally, myself, I've never entered these transactions. My staff are responsible, and at the time, it was only one staff who was having access to this PE database. So they would enter the transaction. A lot of times at AGD, they would go there in person to the accounting department, enter the transaction, and we would sit in the office and complete the rest and
Okay.
make the payment to staff. So
sorry to interject. Can we have observations from the external auditors? Yes.
Regards to point number 7, payroll reconciliations. Point number 7. Now, our understanding about this point is that they have two parallel systems, one for the payroll and one for the business. And there was an interface problem and valid data from these two systems. And what we noticed was that there was no regular reconciliation, leading to these differences that we have pointed out. So that was what we noticed. Two parallel systems were one for the payroll and one for the business system.
Can I just make this? Can I seek for this clarification? The difference of 2.4, does it belong to the year 2019 alone, or were there some particular cumulative reconciled balances? No, that's for the external auditors. That's for the external auditors.
It was just for 2019.
It was only for
2019.
2019.
Yeah.
Hmm?
Yeah.
Okay. That is EG1, thank you. That is EG1 on the payroll difference. Do you have any observation?
No, he wants to, I think, add to what?
No, yeah, what they said is right. It relates entirely to 2019.
It relates entirely to 2019. But here is the situation. The external auditors are saying you are maintaining two parallel systems. Sorry, can I learn that you are maintaining two parallel systems, one on the IFMIS and the other one on the payroll, and you have a problem in interpreting the two. That resulted to cumulative, unreconciled balances. Now, the issue is, why were we having those unreconciled balances? Why is the difference between what is in the IFMIS and the payment system you are having? Both of them have to be the same.
Actually, I will first clarify that they are not parallel systems. they are not parallel. They were just complementing. Because Epico records expenditures, it wasn't suitable for recording of staff PPE data. That's why we had a different system, better suited for that. And that's why we it's called last DNA, for entering of staff PE data, and this is working side by side with the Epico. Epico, it is in a sense complementing Epico, so staff salaries are first recorded on NAS DNA and then exported to Epico for the final payments. So they are not parallel, they are serving different purposes. Yeah, it's exactly what we have at the Treasury Unit of Accountant General's Department. That's how they are doing it. And I would believe that's how it's being done even here at the National Assembly.
Auditor General, what is the status of that reconciled balance as of now?
Yeah, so
You do that for my behalf.
yeah, as we've said, it's 2019. This problem happened in 2019. We realized it in December of 2019, and that's when we tried to resolve it. Actually, we were unable to go back to the period because it's in a different system. If that period ends, as we were told at AGD, you cannot go back to it to resolve the problem. That's why it stayed as it is. It's a period when they close it, you cannot go back. But it was just 2019. In 2020, yeah, subsequently we didn't have this difference.
It's okay.
It is, yeah.
That's what we wanted to do. It has been resolved, right?
Yeah.
Sorry, that's what we wanted to do.
We want to understand that. Does it mean the problem just disappeared? It vanished?
Yeah, this period.
How was it solved? What were the
No, this is
corresponding entities or the corrective measures taken to address that situation?
If you go to the system, and bring the reports for 2019, you will see the same figures. But it's not a system that roll over balances. So if you have a problem in a particular period and you are unable to, you haven't rectified it in that period, it would stay there. If that period closes.
Thank you. I think this sounds just justified where we started in deliberations. This is why we were saying the cast against their votes. Now, you have a problem in 2019. That problem is solved. Still now, that difference of 2.4 is there. Again, but because the accounts for 2019 are closed, automatically the problem doesn't reflect anyway. And that doesn't mean that we do not have an integral problem in the accounts that we are presenting. Mr. Auditor General, this one will come to you because it is in your purview to come up with recommendations. Okay. What would you recommend? Sorry, anyone, I will come to you for this one. We've already got the conclusion and we have the situation. The problem still persists. It's just not visible. Not so. Because the system has enabled you to just do away with it and continue on with your normal operations. And it seems as if nothing has happened. When embedded in those figures are some significant discrepancies. So, Mr. Auditor General, this doesn't have to be about the National Audit Office alone. It has to be about.
Okay, allow him to just do that.
Just a quick one. As rightly said, it's just like a simple term. You have PE and OCs, just like we have, the NAS DNA is for the PE, just for salaries. So once you process salaries, then it's exported to the other side. To consolidate. So the problem closes out in that year. It doesn't, spill over to the next period. So it's not persisting. It's just happened that year. What you can do is just to do in terms of your hard copy paperwork, then reflect what should have been. But in terms of the system, it's closed. So, and that problem is not spilling over to the next period.
Have you done any reconciliation to substantiate where this difference of 2.4 is coming from?
Yes, that's what my question.
No, detail. Can we have a breakdown in that case? If at all the problem is not assisted, can we have a breakdown of the reconciliation that will reflect truly the root causes of this 2.4 million? And we request to have it on Tuesday, like we are bringing the audited evidences.
So I think we are looking at this at different angles. One that this is actual difference, and the other is accounting posting error. Essentially, for us it is about an error of posting that has occurred, and the system has reconciled itself at the end of that, so it doesn't go for. Essentially, I think Usman, that's what I want to say. This was an error in posting that has corrected itself, so it doesn't be all. Or am I interpreting it wrongly?
Yeah, you're right that it's not spilling over.
Yes, but why is it not spilling over? If it's because it is not.
The periods are independent. The periods are standalone periods. Like every month.
Yes.
In PE, in
yes.
terms, in processing salary data, every period is distinct from the other.
Yes. But the question now is, what happens to this 2.4 million? What happens to that? Was it actual difference between the two statements?
Yes, what I said, we didn't realize this problem until December 2019.
Yes.
And in that period, what we wanted was to pay the salaries of December. So when that was done and that the December period closes, we engaged Treasury. Myself here, we've engaged the Accountant General, specifically the Deputy Accountant General, Accounting Unit. We engaged them on the possibility of going back, to these periods to look at the issue and have it resolved. But we were advised, we were told that there is no way that these periods could be opened for us to make any adjustments. It's not epical. It's not epical where we generate balances to report on our financial statements. It is NAS DNA. Yeah, it is different.
That's why I bring this question. I said that the system has given you the avenue to allow errors to be closed in the financial years that they have happened. And for the rest of time, you might not be able to know explicitly what was the main reason for this particular discrepancy. Even if at all it's a clerical error, then the misposting would have been somewhere. One would have asked for those justifications. So unless and until, as the accountant, you are able to give us a detailed reconciliation to say why and how this variance is established, then you can only conclude to say that the value of salaries that was reported in the financial statements was an understatement. The Auditor General, the external auditor is saying no, but still none of us could come up with the reason for the 2.4. Why? Did you do any reconciliation? The accountant? Was there any reconciliation done?
No, there were no concurrent reconciliations at the time.
To the external auditors, did you do any reconciliations to know why the 2.4?
That's how we come up with the difference.
That's how you know.
Compare the payroll. That's why if you refer to page 23. Page 23 of the 2019 financial statements. Page 23.
Yes.
Now, what happened here, just for clarity, these are two different things. This is a monetary information schedule, payroll report. And then the account has the monetary transactions. So as auditors, we are not saying that there was any issue with the monetary transactions. But what we are saying is, if you go into the payroll report, There's the issue inside the payroll report, causing this difference. That's why you see the payroll report appendix, it's not arguing to the financial statements. Now, even there was a monetary issue in the financial statements, it's a different issue now. It's on accounted funds or, yeah. So that's it's like reconciling your asset register to the financial statements. You buy a laptop, $1 million, it's in the account, but you go into your asset register, it's not there. What's happening? So that's the issue. It's not a monetary issue. Yeah. Yeah.
You want to say something?
No, I'm just moving to
Okay, this is the issue. And to conclude on it, like, we have a difference. It could be a non-task one. We can say there are no losses of material value. Okay. But to be specific, since we do not know the root cause of the problem itself, we can only know the root causes after a reconciliation. In the absence of the reconciliation, how do we substantiate our conclusions? You must know the problem. You must know where it emanates from. Then that can put you in a position to evaluate whether there are some material risks involved or not. But the accountant is telling us that they cannot go back to the prior period because it is closed. Since they cannot go to the prior period, they cannot do any substantive reconciliation. Okay. So, which means there is nothing we can do about it. So now, what do we do moving forward? What would you recommend?
I would recommend timely reconciliation to do the last days of payroll through the IFMIS accounting system.
Okay, to the Auditor General.
Yes.
How is the status of the two systems as of now? Are you maintaining timely reconciliations?
Reconciliations. We do regular reconciliations now. We have, by the way, we have the other auditors have begun the audit of 2020 and 2021. So right, according to my staff, they are doing the reconciliations. Some of these issues will not come up.
Okay. Okay. On that note, we wrap up the financial aspect, but I will hand over to the chair so that he will continue with the questioning. Chair, come and take it.
No, it's okay.
As you will be seated.
No, fine. It's okay. No. Thank you very much. The only thing I would just want to ask the auditors, we've seen that you've concentrated a lot on the financial aspect and also the legal issues, but I've not seen anything dealing with ICT itself. And the institution actually has done a lot of investment in ICT, and we think it's important, at least for you to get to probe into those activities, so that moving forward as an institution, they can actually use best practice to ensure that because they have a lot of information about the government. So, but I've not seen anything as far as the audit is concerned. Not so if that is not part of your TOR or they just want to restrict in a particular area.
Thank you very much, Honorable. So, I see your concern. Maybe you're looking into disaster contingency recovery plans and everything, but it all falls back to the IFMIS general government system. Because they're recording on the IFMIS at AG's office. And definitely, I'm sure the AG has adequate IT policies to back the data of government. Because they also fall under government data. It's not like they have their own system at the office. They're posting onto the whole IFMIS server in Gambia.
Well, that is only on the financial management. Then the rest they have on their own. They manage on their own, it's on their website, the data they post there, and their internal data storage, has nothing to do with the IFMIS people. Those people, they are directly responsible. So they have their own, as far as the IFMIS is concerned, that's the responsibility of accounting general. But there are other systems they have internally, that's their own responsibility, it has nothing to do with the accounting general. So that's what I'm trying to get at. Those that they control, they manage on their own. We need to see that there's some kind of continuity in case there's a disaster, and we need some kind of continuity to initiate. Yeah. Yes.
Yeah. Chair, you know, they came at a time when, but we have then installed some of these things. So they could not have during that time, we are almost relying on it, so almost all of it. But now, DPOT, we can put your PS address. We have a backup site now in Banjul. Yeah, that is communicating with our information system back home. So we are so the new auditors, if they come, they will look at it. But we try to secure it as much as possible, looking at continuity and so yeah. We have
Okay.
those things. Yeah.
Now, your time with them is finished now, right?
Yeah.
Okay, so the new auditor is coming. Do you have any kind of exit meeting with the new auditors, or you just go and come?
That will be at the initiation of the new auditors. We are speaking to them to come and do that, so they will contact them.
Yeah, no,
Yes, that is a normal, yeah.
Exactly. If they have
That's a normal process.
Exactly. So that process also needs to capture that particular area, because we need to know what can happen as far as your ICT aspect is concerned, so that we don't want to go and say we in fact went because of you said our data is lost or something happened our site the server is this or the server that. We want to ensure that whatever you keep there is some kind of continuity to it. That's what we are trying to ensure.
Yes. The rest assured we are completing installation here in Banjul, and the two systems are talking together.
Yeah,
We have a disaster recovery site in Banjul.
Okay, we'll be visiting. Just make sure they keep logs and the tests they do. We will be Okay. Thank you very much, members. If you have any questions before we let them go, are we okay? All right. So thank you very much, and this team, and then also the auditors. Thank you very much for being really providing us with very good insight and guide as to doing our work. We want to thank you once again. So once we have the GPPA, we're going to incorporate that into our own recommendations. So I'm sure when we expect to get the 2020 and 2021, because we want to be up to date. We want to, by end of this year, we want everybody to be up to date. So that coming next year, we deal with quite issues, not things that are 1 or 2 years behind.
Maybe you can, your secretary can talk to the auditors. You appointed the auditors, so you can, maybe they will give you timeline. You can ask your auditors, maybe they will give you time, but we hope they will finish quickly. Because you have resolved most of the issues that we have had with the inmates. Most of the issues are now being resolved.
Yeah, but the auditors will tell you, the people is your responsibility. Just come and inspect.
We have done that. That's what we have submitted the accounts.
Okay.
They are ready and they have been submitted to the auditors.
All right.
That's what I'm saying.
That's good. Yes.
We don't want to pressurize them as if we don't want them to do thorough work, and so this is why we are just trying to prevent over them. Because not us, it's like we are restricting them to do that.
No, we will do that.
So we allow them just do it. So if you can.
That's fine. No, we will talk to them. Just to ensure that we want to see the National Audit Office to be #1 in the country in terms of the loss of the land is concerned, as far as submission of your account. So you take the lead and let others follow. But right now we have institutions that are above you. We want to be that. Okay.
Yeah.
Thank you. So can I have a member move that we adjourn till in that Yes. Can I have a member to move that we adopt the reports for 2017-2019 for the National Audit Office?
I move that the financial statements of the National Audit Office for the years 2017, 18, and 19 be adopted.
Any second? Okay. So thank you. So the accounts for 2017 all the way to 2019 actually has been adopted by the FPAC. Thank you very much once again, auditors and the National Audit Office. Thank you. So we'll be back at 2.
Eddie, you are not going there.
You stay.
1 o'clock.
What time?
2:15.